Hey there, everyone! Welcome back to our channel. Today, we're diving into a topic that's super important for your financial well-being: where to keep your emergency savings. Everyone knows that having a financial safety net is crucial, but knowing the best places to store that money can be a bit tricky. So, let's break it down together. But before we jump in, let me ask you this: if an unexpected expense pops up, where would you want your emergency savings to be? Is it in a bank? Under your mattress? Or maybe something else entirely? Well, stick around, because we're going to explore the best options to keep your emergency fund safe and accessible. First, let's define what an emergency fund is. An emergency fund is money set aside to cover unforeseen expenses. Think medical bills, car repairs, or job loss. Financial experts generally recommend saving 3 to 6 months' worth of living expenses. So, once you've built up that fund, where do you keep it? Let's look at some of the most popular options. One of the most common places to keep your emergency savings is in a traditional savings account at your bank. These accounts are typically easy to access, and you can withdraw money whenever you need it. According to the FDIC, the average interest rate for savings accounts is around 0.05% as of 2023. While this isn't a huge return, the principal benefit is liquidity, meaning you can access your cash quickly when emergencies arise. Imagine your car breaks down unexpectedly, and you need £800 for repairs. With a savings account, you can easily transfer the money to cover that expense without any hassle. Now, if you're looking for a better return on your investment, consider a high-yield savings account. These accounts usually offer much higher interest rates, sometimes up to 3% or more. Many of these accounts are offered by online banks, which often have lower overhead costs than traditional banks, allowing them to pass the savings on to you. A recent study showed that a high-yield savings account can earn you up to 60 times more interest compared to a traditional savings account over a year. Just think about how much that could add up over time. Another option is a money market account. This type of account typically combines features of both savings accounts and checking accounts. You can earn a higher interest rate, and you may also have the option to write checks or use a debit card, providing additional accessibility. However, keep in mind that money market accounts often require a higher minimum balance to avoid fees. For instance, if you have £5,000 in a money market account earning 2%, you could potentially earn £100 in interest over a year. That's a nice little boost to your emergency fund. Now, let's talk about certificates of deposit, or CDS. These are time deposits that usually offer higher interest rates in exchange for locking your money away for a set period, ranging from a few months to several years. While this can be a good option for part of your emergency fund, it's important to remember that accessing this money before the maturity date can result in penalties. Currently, some banks offer CDS with rates as high as 4%. If you're confident that you won't need to access a portion of your emergency fund for a while, this could be an excellent way to maximize your savings. Finally, let's not forget about good old-fashioned cash reserves. Keeping a small amount of cash on hand can be beneficial for immediate emergencies, like a flat tire or a small medical expense. Just remember to keep it in a safe place and don't let it tempt you into spending it unnecessarily. Now, you might be wondering, what's the best option for me? Well, it really depends on your personal financial situation, your comfort level with risk, and how quickly you might need to access that money. A combination of these options is often the most effective strategy. To wrap things up, keeping your emergency savings in a place where it's both safe and accessible is key to ensuring you're prepared for whatever life throws your way. Whether you choose a traditional savings account, a high-yield savings account, a money market account, or even CDS, the important thing is to start saving and keep that fund growing. If you found this video helpful, please give it a thumbs up, subscribe to our channel, and hit that notification bell so you never miss out on our financial tips. And, as always, feel free to drop any questions or comments below. We love hearing from you. Until next time, happy saving!